What's up, guys? Welcome back to Kryptonite, because I believe that cryptocurrency and the blockchain are the kryptonite of our modern financial system, and I love it. Guys, I know it's been a couple days since I have made a video. I was quite busy the last couple days. For those of you that don't know, I am an actor, so I did have this pretty sweet acting gig. I did pretty much all of, it was all of Wednesday. And funny story, I played a dad in a commercial for a brand called Corduroys, which are like these giant bean bags that turn into beds. So pretty dang comfy. So I got to hang out, meet some really cool people, and I got to pretend to be a dad. I had two ginger kids that they cast for me. I also had my pretend wife not show up and bail, so they had to call in a replacement wife who was she wasn't actually even an actress. She was just a friend of she did pretty good, though. I will say she did pretty dang good. She even gave me her number at the end, so we'll see. I might call her. Anyway, guys, sorry for that little backstory. Let's jump into the Bitcoin charts. We know that there has been some big moves lately. We also had the Ethereum merge that just completed. That was a little bit anticlimactic as far as the charts were concerned. Kind of more of a sell the news type event. Again, still good news for Ethereum as far as the tokenomics. The amount of inflation, was triple halved with the merge. So there should be a lot less ETH coming onto the market, and you're going to continue to see the burn of ETH transactions. However, I don't think ETH transactions are really all that high right now due to market conditions. I, for one, was someone who was interacting with Ethereum almost on a daily basis with NFTs, and I barely do that at all now. I'd go check on NFTs every now and then, but I have basically, due to the bear market conditions, I've had to go back and do more, regular grunt work for money, as well as chart time. So I just haven't really had the time to dabble with many NFTs. I feel like a lot of people are probably in the same boat, where NFTs were probably like this cool thing, but then there's like this recession and prices of everything are going up, and the job market's still looking good right now, but the Fed's trying to kind of kill that just to make it so force us into a recession, basically, to strengthen the dollar. So you don't know when you'll get fired or laid off. Could happen soon. I don't know. There's bad news in the market as well. We know the Fed is potentially, inflation did not go down as expected, or as much as expected, and you saw the market dump huge. I'll show you that in a minute. So it's probably, the Fed's probably going to do another 75 to 100 interest rate hike to try to bring down risk assets, try to prop up the dollar. And I'll show you the DXY as well, so you can kind of see how bullish that is looking. So let's do that first, actually, before I even get I think the DXY is a great thing to start with, because it really, all the risk assets are going to follow the DXY. All my charts got messed up again, so I'm kind of back to, I was able to save all my work I did on the DXY. In fact, let's get rid of some of these, rid of those trend lines there. So you can kind of see a little of the history of the DXY. We did have this falling wedge. We broke down out of it, retested it. This was Bitcoin's recent pump, was during the DXY decline here from 110 all the way down to 107. Since then, however, again, the DXY double bottomed here at a Fibonacci level, the 0.5 retracement level right here. I did go past the 618, but it did get to the 0.5. Double bottom, previous support right there, a little lower, kind of right on the 0.5. Immediate, huge blast out of this falling wedge pattern. Now we are in what I believe is a bull flag pattern, and it just makes sense with what the macro environment, what the Fed is doing. I mean, this, it's a bullish pennant, looks pretty damn clean. We could check, actually, one thing we will check on the volume, but this would be the target of this of this will actually take us all the way up to our weekly 1618. So this would sort of be the on this bigger Fibonacci, I believe the 16. Oh no. So that, I guess I must have done a weekly fib, and it got me to the 1618. In fact, let's jump back here. Let's go to the weekly. Let's see what I saw. Let's see what past Tim saw there. Here's just a couple of different support levels here. Yeah, so apparently that is the 1618 on the weekly. So maybe, you know, guys, that's an interesting target, because let's see here. I must have done it maybe from here to here. That's what gave me that. Yep. Okay. So this is what gave me the. Oh, it gave me the monthly. That's the monthly 1618. Weekly 1618. What do we think? Should have kept those fibs from earlier. I'm assuming something like. Hold on a second, guys. We're getting this together here. I'm assuming something like this maybe was that one. No, that's not the weekly. About this maybe. Yeah. Okay. So this Fibonacci here, from our swing low here around 88 back in January of 2018, double bottom there pretty much. The 1618 is right there. So that, you know, that's interesting, because, and let's see if that was some confluence here, because I do see this W pattern right here. And let's see, well, it's not too much confluence. That price target has taken us much higher. That takes us all the way up actually to the monthly level of resistance. So basically, guys, things aren't looking good for risk assets. This is going to be a long bear market. This is not over. The fact that Bitcoin is holding 20K is pretty impressive. So maybe it'll just continue to basically range around 20K while this whole DXY bullishness plays out, until, you know, finally the Fed stops doing what they're doing, and finally, you know, inflation kind of catches up. Because, you know, we could see this W pattern play out. We could see it come all the way up to the monthly level of resistance, which would take us all the way back to 2001, guys, when the dollar got up to 120. And of course, we do have our potential bull flag taking us all the way up to the weekly 1618, which we could see a little bit of cooling off after it hits the 1618 there. So, what that being said, the DXY looking very bullish essentially is being completely propped up by what the government's doing. They're killing all risk assets right now with what they're doing, trying to rein in inflation, which I think is odd, because, and I get Bitcoin right now is considered a risk asset, but I'm hoping in time people realize that Bitcoin is more of a safe haven and is more of a gold type asset that really, when inflation starts to go up, or when there's bad news like, hey, they tried to rein in inflation and they couldn't, logically Bitcoin should go up with that news, because it's an inflation hedge. You know, it's a capped currency. It's a global capped currency. So there's only a limited supply, whereas the dollar's infinitely, you know, printed. But unfortunately, because of what the Fed's doing, it does really, really prop up the dollar. And when the dollar is this strong, it definitely reduces all risk assets, regardless of what they are. But again, I still think it's ridiculous that Bitcoin is a risk asset, but I think it needs time. It needs time for people to trust it. Gold's been around, you know, hundreds of years, probably thousands of years probably. So people trust it. Bitcoin only been around, what, 9 years? That's right. It hasn't actually. What is the exact? When was Bitcoin? I should know this as someone who supports Bitcoin. When was Bitcoin invented? I'm gonna know this so I don't. 2008. 2008. Okay. 2009. 2008. I was almost right. So let's look at Bitcoin now. Again, all my charts are jacked, so I got to redo a lot of them. Anyway, this is Bitcoin on the monthly chart. Still in our falling wedge pattern, nothing new to report there. I think, last time we looked at this bar right here on the MACD was showing that it, was cooling off, but since this candle hasn't finished, it's kind of back to, it might have been on the weekly that it was cooling down. No, I think it was that one that was showing that it was cooling down, but then it obviously altered with the recent news here. So we did get this cross here on the MACD, but again, not very sharp of a cross, as you can see. Just really kind of weak momentum. That's pretty obvious, right? So, guys, my prediction here, and I have some drawings to prove it here on my last video. So I actually was, right on a lot of, look at this. Before this stuff even happened, I drew, this is what my prediction was like. We're going to come, we're going to get some resistance here at this this level here of resistance, break through, retest the top of our pattern here. Our little, looks like essentially, man, my brain is blanking right now. Why can't I talk? Holy moly. Guys, this is a broadening wedge, an ascending broadening wedge. And so we came up, we retested the top, just like my little squiggly show. I swear I drew this. You can look back at my other video. I drew this before any of this happened. Got that rejection down a little bit later on. Came all the way down, and I thought we would get support right here at the 382. I thought we'd get 0.5. Thought we'd get some support right here. We did not. We broke right through this trend line. Even sort of retested, the top of it, or just kind of the top of this range, and then continued to break down further. Right now, we're all the way down to the 236, getting a little bit of support there, but again, looking pretty weak for the most part. Just kind of in this basically descending. I think it's going to be a descending broadening wedge. All right, so same thing. This is ascending broadening wedge. Now this does have a bullish breakout bias, so that's the only benefit here, is this should break out. However, the price target is not very high. It'd be basically the top of the pattern, so we'd maybe coming back to retest this range at about 20,500, but not looking all too spectacular for us here. I'm in a little trade right now, actually. You can kind of see it right there. Yeah, so basically what happened was, if we go back to kind of a longer term Fibonacci level here, in fact, I think I have it right here, perfect. So I was talking about this before in my other video, how, and this is why, I had my squigglies as like we were going to get rejected around here, because not only did we have our, pattern resistance, but we did have the 382 retracement level, which we know the golden pocket is, one of the most important retracement levels in all of the land. We were oversold or overbought, sorry, on a lot of the RSI indicators for the longer term, right? So we started to print bearish divergences. We started to make lower highs, but making higher highs on the RSI. We were overbought. We got a rejection from the 382. Had to, perfectly timed with the CPI numbers coming out, basically saying they failed to rein in inflation, and it wasn't where expectations were. And you saw just, minutes after that announcement came out that we just had a huge move down and are continuing this move down, breaking through trends. So not good. Once again, we failed, just like we failed here. We failed to get back to this long-term falling wedge trend line. All right, we broke back down. So I still think, there is a chance we do get some support from the 236. We do make another comeback here and try to make another attempt. But we do have our 200 moving average that is, holding us up at this point, pushing us down and further down this pattern. As you can see, it pushed us down here. We finally broke above it, but it broke underneath it, and then it pushed us down again. So push us down again. So I am a little worried if we can't get back above that 200, that it will push us down further for another low, finally breaking us lower than our previous low at 17,000. We could be seeing lower price targets. I would not be surprised, just because of what the Fed's doing. I don't know how you can really stop them, artificially, literally murdering risk assets and just propping up the dollar. It won't last forever. Of course, at some point they will have to get back to the money printing. It's just kind of inevitable, the debt system that we're in. So, as for now, the dollar's doing good. So I guess enjoy prices coming down on some things for now, at least. But overall, again, 40% of our entire supply of currency was printed in the last year. So who knows when the next pandemic comes along and, we got to print a crap ton more money. I mean, they're going to have to print money to pay off those student loans too. So there's the money printer's going to have to turn on for that one as well. Let's jump down to the lower time frame. So again, as you can see, I'm in a little trade right now. I just took a little short position, just a little one on the minute charts, which I'm gonna have to go read you my charts since they're all jacked. But yeah, just saw that we were kind of in the middle of this range here. Probably wasn't the smartest trade now I think about it. I think I was just trying to get I was just gonna try to trade it down to this trend line here basically. I'll probably just take profits around there. So I won't even get the full trade. I just wanted to get a little bit there if it gets there. I did win a trade on the NASDAQ. Show you guys. Wait, here it is. Here we go. Right up here, I won this little trade on the NASDAQ. Nothing crazy, just a little 1-to-1.5. Again, we had got a little signal here. Had the red momentum candles. Volume increasing. Yeah, it's kind of again, we're trading under the 21, we're trading under the 200. And as you can see, we're starting to trend, starting to trend down pretty strongly here on the NASDAQ. Again, I saw the DXY super bullish. So it was a pretty easy trade to make. It was just, oh yeah. In fact, I think I have a trade breakdown of it, but I had to reload it up because all my stuff got screwed up. Yeah, it was pretty much, this was just, got the signal, saw we had red momentum, red Heiken Ashi, saw the DXY was bullish. I mean, pretty no-brainer trade, honestly. Take that trade a million times out of a million. All right. That, I think, is all I have for you guys on this one. We could check out Ethereum real quick. I think I had pulled up. Again, I got to read you all my charts because they all got screwed up. Freaking annoying. Sorry about this, peoples. Let me go to Ethereum. I was on the charts live for the, merge event, but it was pretty anticlimactic. Pretty much just a, see if I think it was right in here. I was able to win a short. I took like a scalp long, and it kind of pumped up. And then I took profits real quick, and then I could tell the strength just wasn't really in it, and it kind of just died. So I was able to win just a really quick long position. And then it just kept dumping down. So again, the Ethereum, it'll take time for the Ethereum merge to kind of play out and that sort of scarcity to play out eventually. As you can see, we did have this cup and handle we were developing, but we unfortunately broke out of that. So don't think we can rely on that pattern just yet. Again, the macro is just not good. Not good for us. Not even good for the merge. So that is disappointing. And then the other coin I want to check on one of my other favorites, ADA. ADA had the Vassal hard fork. No, I think they pushed it back. I'm pretty sure they pushed it back. So it's still just kind of ranging. I'll just try to do some TA and some other altcoins for you guys in the future. But honestly, the big guy to watch here, as always, is pretty much the DXY. I mean, that's right now. Look at that thing. Look at this. Although we are getting a little bit of a rejection there at that trend line. But that, so yeah, we'll have a little just temporary coming down for a little bit. Retest the bottom here, but it's in a pretty bullish pattern. I do expect it to break up and out of that pattern. Let's just do one test though, just in case. If we were to consider this, a reversal. Yeah, that's not looking too good because look at that. We broke above the 382, which normally you want to get. That's like the last strong retracement level. We broke above it. broke above it again, and are now using it as support. Have this W pattern forming as well that we're close to breaking out of. So that is not something I would be like, oh my gosh, that looks like we're coming down. That does not look like we're coming down. That looks like we're continuing the uptrend from our previous trend. Again, we are at the 0.5 retracement level from that other Fibonacci. So, and of course, we're in the super, super long term. Let's see if I pull it up here. This is the super, super, super long term channel that we are in. And we're starting to come near the support of it, but then that's when we got our retracement. Interesting. All right, guys, that is it. That's all I got for you guys. Look for shorts pretty much on all the risk assets. Again, maybe just long here within the next couple hours, just because it is DXY is coming down just a little bit as it's coming kind of back down into its pattern. So that's not much room though before it gets support again. So again, you're looking for shorts. Hate to say it, is what it is. Guys, as always, make sure to save your money, grow your money, buy some Bitcoin, because we all know that dirty, dirty fiat currency is going to zero. It's the ultimate meme coin. It's a debt-based system. Eventually, not currencies were not meant to last forever, except for more of the metals like gold and silver and such. Those are meant to last a long time because they're just going to last. They sort of don't belong to any government, right? No government is like, we own all the silver, right? It's sort of a worldwide thing. Same with gold. Same with Bitcoin, right? It's very similar fundamentals and principles to it. It's essentially the same thing, just a digital version of those, of silver, gold, those kind of things. It's a digital version. Because again, if America falls, if Singapore falls, if Europe falls, Bitcoin doesn't care. Bitcoin's going to keep on Bitcoining all around the world. Silver's going to keep on silvering. Gold's going to keep on golding, because those things aren't reliant on a government system to give them value. Right now, the dollar is reliant on the structure and system of the U.S. government to provide the value. Once that system is gone, which I know those of you that think America is going to last forever, just look at history, the history books. Civilizations are constantly rising and falling, rising and falling. Look at Rome. We are a great example of Rome, and I think we will collapse in a very similar way that Rome did. And you already kind of see the beginning signs of that in a lot of ways with think about it, right? In our world today, professional athletes are making hundreds of millions of dollars, right? And what did the Romans do when they were trying to distract the common people from the fact that their government was collapsing? They turned to sports. They turned to the Colosseum. They turned to, let's distract people from the fact that this system, our government, is collapsing, with sports to keep them happy. And we're at a time in America where literally athletes are making hundreds of millions of dollars, crazy amounts of wealth, because we are consuming them. And I'm right there with you. I'm a big football guy, basketball guy. I love sports. So nothing wrong with watching sports. I'm going to keep watching sports, but are we being distracted with sports to have us turn a blind eye on what is happening to our currency, what is happening to our government structure, and how long will America survive? I do not know, but we've had a good run. I can tell you that. All right, guys, I'll see you on the next one.